So first of all, let me apologize for my computer letting Microsoft take over earlier. Unfortunately, Microsoft likes to do that to all of us from time to time. So I think the chocolatier that you said that you helped fund actually got $7,000 of loans. She is a merit graduate, and she has paid off that $7,000, if it's the same person I'm thinking of anyway. And she thanks you. I'll thank you for her on her behalf. So a little background. I have been in a lot of industries. I am an accountant. I do teach accounting at Western Oregon University. I have my own firm. I do teach at a variety of locations, including for Merit and for the Small Business Development Center and Western Oregon in my spare time. The other thing is that I was going to say, I have used QuickBooks since it came out. So some of the people I work with have QuickBooks 2006. It still works. You do not need to upgrade QuickBooks every year, unlike what QuickBooks will tell you that you should be doing. I will be showing you a little bit about 2015. I haven't gone to 16 yet. I haven't needed to yet. So, first of all, are all of you in business now? Yes, yes. None of you are thinking about it. Okay, that just tells me what I need to talk about a little bit. So, basically, when you go into small business, you know a lot about the work you want to do, but you don't necessarily know the administrative side or the accounting side of things. And so you could be a great success on the type of service you provide or the type of product you are providing, but if you don't know how to manage your funds and don't know how to report things, you could end up being a failure. So the whole point of my presentation is to help you avoid being that failure who knows how to do the work but not be the company. Okay, so why do we do accounting? We gather up all the information that we receive on a daily basis, so your receipts, your bills, the work you do that you invoice out, you gather that all together and you have to report it in some fashion. And so you start usually by trying to figure out where your money's coming from and what you are using to spend your cash on, and you're trying to figure out how much profit you're making at the end of that time. And we start by doing that with a simple chart of accounts. And so when you think about your chart of accounts, you basically want to think of your chart of accounts as a 5-drawer filing cabinet. And this 5-drawer filing cabinet, every drawer is going to be a different category of accounts. And one of those drawers is going to be labeled assets. And in that drawer, you're going to have a lot of folders. And one of your folders will be for cash. How much cash do I have? What are the transactions going through my checking account? One of your folders is going to be your accounts receivable. What do my clients owe me? I've billed them, they haven't paid me back yet. You might have a drawer for equipment or for office furniture. Not a drawer, but a folder in that drawer. Those are all types of assets. And there's a lot of others, but that's the basics. You'll have a second drawer for your liabilities. Those liabilities are the debts you owe. So you have a credit card, that's a liability. If you owe money on a car or a computer, that's a liability. When you employ people and they earn money but you haven't paid them yet, that's a liability. Hopefully all of you have finished with the liability called income tax payable, right? You got that taken care of, hopefully. The third drawer is going to be owner's equity. No matter what kind of business you have, every aspect of accounting is exactly the same except for the equity drawer. And I'll talk more about that in a moment. You're going to have a drawer for the revenue. Where does my money come from? Do I provide services? Do I sell products? Do I do both? That's your revenue. And your expenses are your normal costs of business. So do I pay employees? Do I pay rent? You all have insurance, I'm sure. Do I have to pay for business licenses? Mona talked about getting your business name registered. That'll either be $50 to $150, depending on how you're registered. All of those are expenses. And since you are a business, those are all tax-deductible expenses, and you need to keep good records so that you won't be questioned about those expenses when you pay your taxes and you have an indication that those were all deductible expenses. So I'm going to digress from the chart of accounts for a minute here and say there are two ways you can keep your records, the cash basis or the accrual basis. The cash basis says you recognize revenues when you get paid, and you recognize expenses when you write that check or pay those expenses. That's what most of us do. We certainly do it on our personal level, and for most small businesses starting out, there's no problem doing that on that level as well. Typically, taxes are on the cash method. However, if you truly want to focus on the profitability of your operations, the accrual method makes more sense for companies who bill customers that may not pay for 30 to 45 days. It takes them a while to pay you. If you're in construction, it may be 60 days before you get paid. So recognizing the income when you do the work is what we call generally accepted accounting principles. And so if you are billing your customers, then you want to do accrual basis accounting. The other aspect of that is, when do you pay your bills? I get my phone bill. It's for last month's use of my phone, but I don't have to pay it till next month. So when do you want to recognize that expense? If you want to recognize it when you actually used it, you need to do the accrual method, not the cash method. There's a little note down there that says if you're using QuickBooks, it's just a matter of a touch of a button, and I'll show you that later on. Okay. The other thing you need to know is whether you're keeping your records on the calendar year basis or a fiscal year basis. If you are a corporation, you can have your finances on any basis you want. A corporation can move away from the calendar year as their taxable year. So a corporation can recognize maybe a low point in business, or a seasonal business might want to have a different tax basis because of that seasonality. When you choose a fiscal year that does not match the calendar year, if you are not a corporation, you're going to have to pull it all back to the calendar year because you have to pay taxes on the calendar year. So corporations don't have to do that. Corporations can pick any taxable year they want to. So they could say, I want to pay my taxes based on revenue earned from April 1 to March 31st. Or a lot of agencies at the state and county level do July 1 to June 30. Well, their taxes are going to be due 4 months after the end of their fiscal year, just like our taxes are due 4 years after our taxable year, which is December 31st. 4 months is April. So our taxes are due April 15th. So you can pick other taxable years, fiscal years, if you want to, if you're a corporation only. So there's financial statements you need to pull up, and profit and loss statement is one of the most common that people want to see. How much profit have I made through the year? I'm going to show you an example of that eventually. You can do it for 1 month, you can do it for 1 quarter, you can do it for 1 year. Balance sheet is a snapshot. How much money do I have in my bank account today? Or how much did I have in my bank account on the last day of last month? So it's going to tell you the balance and how you are doing financially in your business. The income statement says, how am I doing operationally? The balance sheet tells you how you're doing financially. And then the statement of cash flows, which no one except accountants know or understand, and if any of you want to truly understand it, see me later. Okay. I said that all of accounting is exactly the same for every business organization except equity. And that's because a sole proprietor has one owner, so all of the equity is shown as capital. That's it. Everything, whether it's an investment or profits, get lumped into one account called capital. If I'm a partnership, I will have a capital account for every partner. So if there's 2 partners, there's 2 capital accounts. If there's 10 partners, there's 10 capital accounts. If I am a corporation, I will have 2 accounts in my equity section, one which talks about how much money did you invest in your business. The second one says how much profit have I made in my business and have kept in the business. You may have heard of retained earnings. How much have I earned and kept in the business, retained earnings. So corporations have 2 accounts to watch that equity. Sole proprietorships and partnerships essentially have only the capital account to look at equity. And then there's limited liability companies. How many of you are an LLC? Okay, a few of you. An LLC, many people don't understand this, an LLC is a state designation only. The IRS does not recognize an LLC. That doesn't mean you can't be an LLC, but if you're an LLC, then you tell the IRS, I'm a sole member LLC, tax me like I'm a sole proprietorship. Or I'm a partnership LLC, tax me like I'm a partnership. Or it's going to say I'm a corporate LLC, tax me like either a corporation or an S-corp. So you pick the method of taxation separately of saying to the state, hey, I'm an LLC. I have limited liability in my business. So hopefully you all knew that. And I'm going to move to QuickBooks now. So how many of you already have QuickBooks? Okay, I see 3 hands. All right. So this day and age, QuickBooks opens and it looks something like this. Personally, I don't like that look. So I've changed it, and any of you who want to make that change can do so just the same way I am. Because I want more window. I want to see more window. When I look at QuickBooks these days, it opens to this home page. And it's supposed to be a roadmap. I talked to someone the other day, and she said, oh, you mean that spider web? And I kind of laughed about it. Yeah, it kind of looks like a spider web, doesn't it? Depending on which packages you own and utilize, it'll look a little different. I don't have payroll on this specific version, and so I don't have all the things that the payroll window would normally have. But I have most of the other stuff turned on, and so this is typical to how a company would look when you enter QuickBooks. And it's designed so that you can follow the roadmap. It's intended to be a roadmap, not a spider web. And so if you have a new customer and they want to order something you don't have yet, you can create a sales order so that later when you get the product available, you can sell it to them. If you have the product or the service and you simply want to invoice them, you can do that with Create Invoices. If they come in and say, I want to pay you right now for this product or service, you can create a sales receipt off of QuickBooks. And receive payments is on there as well. So it's a little roadmap of the order in which things are done. Same thing with vendors. If I need to purchase something from my vendor, I might want to create a purchase order. And then I can move on to receiving the inventory, entering a bill at any point, and paying the bill at any point. So the roadmap helps the people who are new to the accounting cycle, because they don't really know anything. I commented earlier about a chart of accounts. When you first set up QuickBooks, it's going to say to you, what are you? Are you a sole proprietorship, partnership, LLC, corporation, S Corp? You tell them. And then it says, what kind of business are you? Are you a service-oriented business? Are you a product-oriented business? Are you a nonprofit business? And you answer that, and it just magically goes out and creates a chart of accounts that has some relevance to your business. And so you don't need to know a lot about accounting to set QuickBooks up and use it. The issue is that QuickBooks can become as complicated as you want it to be or as simple as you want it to be. And so one of the things I recommend for people who are new to QuickBooks is that they sit down and they make a list of everything they want to have a report on. So what do I want to track? Do I want to track that I only have one kind of customer, or I have 10 different kinds of customers? I have retail, I have wholesale. If I'm in construction, am I doing remodeling, new building? Am I commercial, residential? If I'm a nonprofit, do I have grants? Do I get donations? What do you need to track? Once you have that list of things you need to track, then you can start setting up QuickBooks so that it is helpful to you. Now, anybody can start using QuickBooks. It's pretty easy to use. And I'm not going to show you every element of it, but when you get to the point of wanting to see a report, one of the first reports you want to see is your profit and loss statement, which looks something like that. And so for some period of time, and this happened to be all of the transactions set up on this little sample company, you can see they have income reported, and they have one kind of income. They have sales income for this little sample company. They might have some discounts. Notice I've shown discounts separately so we can track the discounts we offer our clients. There's a separate account for returns, so if they return something, I want to know whether that sale stuck or if something came back. The cost of goods sold for a sales company would be the cost of the inventory that you sold, and then the expenses are shown. And then if you have some other expenses like interest expense or taxes, then that's shown, and then net income is the total profits that are left in the company. Now, I did this to see all, so it's covering everything that happened in this particular little sample company, and they had $120,000 profit essentially at the end of the time period. And then the balance sheet shows all the assets. It shows all the liabilities. And it shows the equity in this particular company, which in this case is a corporation. And the retained earnings, which in this case has $152,000, took the net income from the current year plus the net income from the prior year, added together and lumped it all into one account. And that's what QuickBooks does. It knows how to group that together. Notice that this report is done on an accrual basis. Total income is $534,000. I just changed it to cash basis that quickly. It's $518,000 of income on the cash basis. So QuickBooks allows you to do your transactions. You don't have a clue what you're doing with those transactions other than showing that you're writing checks, receiving deposits, billing customers. But the system understands the difference between the cash and the accrual, and it will turn around and report it back to you with just a push of one button, either direction that you want to report it. So it's very easy to translate between the cash and the accrual basis. I commented earlier that you want to make a list of all the things you want to report and record and track, because QuickBooks offers the ability to do your accounting without even seeing account numbers, because you set up item codes. Item codes are a way to track your income and your expenses without even being an accountant. And so you might say, I'm going to call my service income, I'm going to call it service. And you set up a link between the item code and the account number. So you can have people helping you with your bookkeeping who don't have a clue what an account number is. You can say, I want to track my inventory. So QuickBooks allows you to track inventory if you want to. And so you can track when you're running low on something. It will give you a reorder point. So when you're getting low, it's going to say, you know, you're trying to sell 5 of those. We only have 10 left. It's time to reorder. It can tell you that if you're tracking inventory. Okay, so Oregon has no sales tax, but 46 other states have sales tax. If you do business in one of those states that needs to track sales tax, QuickBooks can be set up to do that for you. What else? Tracking the time you worked. You may not be getting a paycheck, but you're working in your business. You can track how much time you're actually spending in the business. Even if you're not getting a paycheck, you can still track that time. And if you have someone who's willing to pay you for your time, then you can set it up so that you can track that, get paid for it. Instead of calling it income, it's an owner's draw. You can get paid for working in your business. Any of you feel like you want to get paid for working in your business? Okay. So QuickBooks allows you to do that. I can record the amount of time. I should have done this when I started this. So if you want to, you can track the amount of time you're sitting at your computer. And so while you're doing things or sitting in your office, whatever you want to, so I should have started this when I started this presentation because it's tracking the time I'm talking right now. And so I could at some point say, all right, I'm done talking, how much time can I bill for? And now you know how much time you can bill for. So QuickBooks is a helpful tool. It is not the only automated accounting system out there, but it is certainly the one that has reacted to people's questions and inquiries and requirements so that they have tried to create a system that works for all kinds of different elements. Yes, you can go out and buy QuickBooks for contractors, QuickBooks for service organizations, you can buy QuickBooks for nonprofits, you can buy QuickBooks for accountants. All of those will automatically default to certain reports and certain chart of accounts. However, if you truly know what you're doing with QuickBooks, and I guess I do, I can make any version of QuickBooks look exactly like all the other versions. So don't worry about what the title of that is as far as who's it for. I will tell you QuickBooks Pro versus QuickBooks Premier do have some differences, and if you are using inventory, you want QuickBooks Premier. You don't want QuickBooks Pro. The other thing that I will tell you is QuickBooks is trying to convert everybody to the online cloud version, and that's fine if you want to pay a monthly fee and have them available to help you with your things. That's fine. You can do that. However, if you are in the industry that requires job costing, like the construction industry, do not use QuickBooks Online because their job costing system has not been perfected. For whatever reason, they didn't take the desktop version of QuickBooks and create it in the cloud. It's a different version. The other thing that I warn you about, and I can tell you I don't have a lot of experience using the QuickBooks app, all it is a check register. It does not allow you to do tracking in an effective manner. So don't spend the money on the QuickBooks app on your phone, because it won't do for you what you want it to do. I couldn't figure out how to do anything but record a check and record a deposit. So I don't know that I've answered everybody's questions about QuickBooks, but I'm happy to answer any questions you have. The other thing that I thought I would mention, backing up what they talked about earlier, I do recommend that all of you check your credit every once in a while. This has nothing to do with QuickBooks. This is just an accountant's point of view. Check your credit rating every once in a while, but most of all, make sure your identity has not been stolen. It is so easy to steal identity these days. You may not even know about it until you try to get another loan, and they'll say, well, you defaulted on this card or this loan, and you have no idea it happened. There was a scheme in Monmouth for a while. Somebody was going around to all the apartments that had been vacated, and they were pulling all the mail out of the mailboxes because credit card offers are not forwarded. That's bulk mail. And they were taking credit card offers and changing the address and getting credit cards in students' names who had left for the summer. Make sure you don't let your mail pile up. Even if you have a locking mailbox, I can guarantee you that people can break into those locking mailboxes. So check your credit reference every once in a while, your credit report every once in a while. Just protect yourselves. What else can I talk to you about? Okay, so QuickBooks, brand new in a year, will cost somewhere around $350. As I said, you do not have to upgrade it every year. Once you get it set up, if it's doing what you need, just keep it. I will tell you that if you add modules, so if you do QuickBooks on the desktop, you have to upgrade the payroll section, but you don't have to upgrade the rest of QuickBooks. If you buy the module that allows you to take credit cards, you might have to upgrade that periodically for system upgrade purposes. Recently, one of my clients has the ability for his clients to pay him directly into a direct deposit into his account. They just said they would no longer support QuickBooks earlier than 2012. So he had to upgrade because he was on QuickBooks 2012. So periodically you'll have to do an upgrade, but if you're not buying the special modules, you don't need to worry about that. As I said, I have someone using 2006. It still works for him. And because the year is half over, you actually might be able to buy QuickBooks for less simply because they're getting ready to think about 2017 already. If you had 15, not huge changes with 2016. It was some of the reporting and some of the batch processes that changed. Other questions? Okay, thank you.